Hey, good morning, Forex traders. This is Vance Williams out of Seattle, Washington, here in the United States. Welcome to my morning Forex trading show. It's Tuesday, December 16th. As anticipated, we had some price movement associated with the high impact data scheduled for today. We'll get to that along with major bank trades, a review of yesterday, and a look at current price movement. To see more of what I'm talking about on the show, when you do play this show, make sure that you click be part of the conversation, little button right there on your window, and then you can actually follow me on Twitter here so you get notifications. I just don't notify people via email anymore for the shows, so you can follow me there and know what I'm going to talk about and when it's happening. And then also you can go to my website here on this link, Forex Art of War. And what you'll see there is you can get my free books here on the right. 8 things they don't tell Forex traders. I wrote this years ago. It's still very true today. And then also the first of my 3-part series on trading here, the first battle. You can also take a look at my trading packages. What I do that's different is I'm actually a coach. I actually watch what you do. People call it coaching and mentoring when they educate you, but I'm actually watching the work that you do. And just like if you were a coach of a baseball player, you'd be watching that person swing the bat. The person swinging the bat wouldn't be watching you. And so we have a real coaching here, and you can check out the options there. Let's just close out of there for now. So I'm going to be coming back to this page in just a bit because I'm going to show you a post that I made later. All right, so let's see. Again, what I do on this show is for educational purposes only. What I share is not intended as investment advice at all. In fundamentals today, between the Carney comments and the CPI out of the UK, price has made a big move. Let's see. I'm on the pound right now. Yeah. The long-term sentiment remains bullish US dollar. Medium term is neutral with the added uncertainty because of the end of the year and the holidays coming. I see nothing fundamentally that will change today's price direction this morning. And we did have just some information released out of the U.S. I wasn't expecting it to do much, and it didn't. So that's coming past a couple minutes ago. Tomorrow we have Fed data, so I'll be posting about that later today on my site where you'll see. Let me just show you that real quick. I do a post high impact data in the evenings usually, and so I'm going to have to make a post note of that. I'm noticing that says AM, and now this show is at PM. Looks like the servers are a little bit off here. PM versus AM. Anyway, I do the high impact data in the evening here in the U.S. and the morning shows in the morning, obviously. Okay, so with respect to major bank trades this morning, you might recall yesterday that the minority of the banks, the majority were selling yesterday, and the minority were holding long. Actually, the 3 that I follow the most, they were actually long, or 2 of the 3, and they ended up making out well as the market turned around. One of the best trading major banks keeps trying to catch the bottom of the dip on that yen. Let me just go over there, and they might catch it this time. We'll see. But I want to show you what I had to say yesterday. If you were, watching my webpage, I put, can the yen go lower? And that was late morning. That's not the correct time. That was late morning. Let me go ahead and go over here. And I basically, everybody keeps trying to pick the next dip bottom on this yen. And so I went and took a look at it, and I pointed out here that the U.S. dollar yen hasn't even reached a 38.2 correction level yet, and which would be around 1635. I think that's actually where one of the majors got back in. But I said since the daily closed below the 23.6, this top blue line is the 23.6, and you can see that solid red candle. Since that closed below, I said it was likely to move to that 116.35 area. Why? 10 years of experience. Mostly this is when we get back to long-term trends and medium-term trends. This is a technique that worked like 94% of the time. So I thought it was very likely that it was going to move to this 116.35 area. And if we look now, you can see that there's almost an equal number of buyers and sellers right in that area. So what's happening now is these traders that were in this were taking profits, right? And now you've got a little bit of a reversal from the traders that were taking profits to some of these same traders wanting to get back in on the move in this direction. There's going to be some hesitation on that because of the holiday season and stuff like that, profit taking into the year. So this is probably the area that's more likely to go into a range. But if we get a candle close below here, the likelihood will increase that it'll move to, I can't see that number, 114.70. So that's something that you can watch for. And that is the daily chart, by the way. All right. So let's talk about the buyer and seller behavior today. During our live trading room yesterday, some of our members will remember that I had a level right in here at 156.00. And the reason why I did it wasn't because of the round number. It was because I was looking, as this was driving down here during a period of uncertainty, I didn't think it was, well, instead of telling you what I didn't think, what I thought was this area right here. See this? This is where the buyers were going to be thinking, that's where I'm going to get in. You see that? 156.00. Why? When there's greater uncertainty, price tends to stay in a range more. And this is a pretty big range, about 145 pips. So that's bigger than usual. And so they were looking to buy here, and they did, and they got a little pushback from these sellers here, right here. Went sideways, went up here, and then when the economic data came this morning, it just launched right off. You know, see how it paused right at the top level here, right in the common area supply, and then it pushed through quite strongly. And then as we zoom in here, we see it came down. The buyers who were really excited about this bought again, and then they closed back under. There's been a lot of strong buying in here this morning. So these buyers are not going to give up so easy, even though this closed back down in the range here. But watch, if the sellers can push this back down and hold it below here, it'll take the wind out of the sails of these buyers here. Let's drop down to the 5-minute. Let's see where the trend changed over first. The balance of money shifted over around 6 a.m. So let's drop down to the 5-minute and take a look at what the behavior was. Okay, so right around in here, and I have to get the ruler out here and see what we had, a move of 34. So there was a, I mean, you might have been concerned about this barrier here if you drew it. It would have been looking quite a ways back in time. So there would have been some increased risk here. So you would have been wanting to get a better entry price. You wouldn't be thinking, okay, 38.2 and go. You'd have been thinking 50%, 61.8 on this move here. But this one's pretty good. Did I lose my ruler? So yeah, 33. And then this one right here, there was a lot of sellers in the area right here on this. This moves up about 60 pips. But before that happens, there's a move from here. Yeah, there's a small move from here. Our traders might have caught on a pullback that shot off out of here. It looks like there was some high impact stuff that was happening right in this area. But I was just looking at how this was holding above here. Let's go back to the 30 minutes. So I think the ideal trade was probably right here with a good entry position. Down here on the 30-minute, the balance would have still been to the downside to the seller, so it would have been more risk, unless you have a lot of experience with early turnover points. All right, so going back to the 30-minute here. I'm new to these charts. I just started using them yesterday. So where we're at here is you could look for price to move above 157.63 to consider another buy. But keep in mind that there are sell orders right in here. So if it does break above this level, you're going to get some opposition pulling back right in here, all through this area, or you're likely to anyway. All right, so let's move over to the euro. The euro, I put this level on here this morning, looking back in time, saying, okay, where are those bigger sellers going to be looking to sell? Well, right around this area, which is 125.60, and you can see that it did. We got some selling from there. Oh, down 60 pips. Quite a bit of selling interest there. Let's see, we're on our 30-minute. Okay, what I wanted to show you is yesterday, I think even on the show, I had these wedge lines in, and we were meeting right about here. And I had this wedge line on here, said that, you know, the thing to watch was whether this goes below or above. And obviously that gave a little impetus to some traders to buy and sell in that area, you know, buying off the bottom and selling off the top of that wedge range. And then the key level to watch would have been right here. See when that came through at about 4 o'clock this morning? That was pretty significant because price had held in that range for a long time. And so that was showing that the buyers had a really good advantage. And so that came at about 4 a.m. with the money flipped to the upside. So let's go down to the 5-minute and take a look at 4 a.m. That's right around in here. And so, okay, so what we want to do is we want to take our ruler and check, see where this new ground was taken by the buyers. These are very specific rules, by the way. Yep, 25.3. There's your trade right there. Boom, boom, boom. So there's one there. This one looks too weak to trade. Next move comes about, it starts here, it moves up to here, 31 pips. There's another trade right there. So you can see that the buyers right here start here, they take new ground, and then they start to pull back after moving 32 pips down to about 50%. So that was the second trade on the euro this morning. And then this doesn't look good at all. So this is all played out. So now this is in a correction. There's no psychology in place, no pattern to move the market higher, though it does have a bullish tone this morning. You know, going back to our 4-hour chart, you can see that this is a pretty important level here. So I mean, there's definitely buying interest this morning, but it's been kind of spent coming out of that wedge, and now we've got a little bit more risk because of the sellers who are going to constantly be interested in this particular area. So what can we watch for? I'm not too keen on the euro right now with what's happening. In fact, it might have all played out, but if you've got something to look for, I'd say probably the pound trade's probably the better one. If you get a move above 57.63. Now remember, there's going to be sell orders in here, so we might not get a clear move. Might just be choppy little moves that have no advantage at all. So anyway, I hope you got one good idea. You can always write to me. Tell me what you'd like me to talk about more on the show. What you'd like me to explain more. I'm happy to do that. Just write to me, Vance at forexartofwar.com. I'm easy to find. You can just Google me and find me very easy. So send me questions if you have them. To our members who are being mentored by me or who are working with me, I'll see you guys coming up at 9:30 a.m. in our live trading room. Thank you, everybody.